Hey guys, it's Chris Wong. I'm filming this video as of February 23rd, 2026, and I'd like to talk about why I decided to switch or slowly switch YQQQ and SH into cash ETFs in order to protect me from margin calls. So as a disclaimer, I'm not a financial advisor. I'm just a guy interested in building a portfolio and trying to achieve financial independence, retire early. So originally, I thought about using inverse ETFs like YQQQ and SH in order to protect me if there's a margin call. I know it wasn't perfect, and I know in the long-term trend, the inverse ETFs, holding them too long will have an average negative return. So if the S&P 500 has an average return of 10% going upward, then SH in theory should have a negative 10% average total return. They can be beneficial for short-term traders, or they can be beneficial if there's a crash and then those two funds go up. But I did find holding them long-term, it's very hard to predict when they're going to go up. And it seemed like if I hold them for too long, if there was a crash, there might be a chance that I may not get the old share price from like a year or two ago because of the long-term trend to have a negative total return. I also did find that the idea of having inverse ETFs, that meant that I had to be more active in my portfolio. That meant that in order to try to minimize losses, then I have to know when to sell them at the right time. Or by holding them and expecting a negative total return, then I know I'm going to expect to lose money just holding them and trying to figure out what's the best ratio I should hold them against the regular long ETFs in order to maximize my total return. In previous videos, I talked about how I want to make my portfolio a bit more simple. So I did realize by holding way too many ETFs that it was becoming overwhelming trying to keep track of what I bought or the dividends I'm getting. Like by having so many dividends that are paying every single week, it's a lot of dividends that show up in my account. It's a lot of dividends that show up in my list, even like if it pays on Thursdays or pays on Fridays. So I actually decided to try to reduce some holdings. And one of the things I decided to do over time is try to reduce YQQQ and SH and then get cash ETFs in my Questrade account just to protect myself from margin calls. I remember sometime last September or October 2025, I actually reduced some shares of HYLD.U and actually moved the proceeds to HISU.U and PSU.U. And I actually had the idea because I had them in my TFSA, and the TFSA was linked to my Questrade margin account, that as long as I hold some cash ETFs in either the TFSA or the margin account, that the worst case, if I were to sell a margin call, as long as it didn't go over the amount of cash ETFs I had, I just had to sell shares of the cash ETFs if I got margin called, and I wouldn't worry about losing money. By having them in my TFSA, and because HISU.U and PSU.U are Canadian listed, I'm not worried about 15% withholding tax. And even though cash ETFs or holding anything that generates interest, the long-term trend, they're not going to beat the S&P 500 or the Nasdaq 100, and they're not going to beat inflation. But I did find that selling cash ETFs to sell margin call, it actually was less stressful than trying to sell YQQQ or sell SH at times. There were times I actually sold YQQQ and SH, and I was expecting them to be a bit higher. If the dividend yield of cash ETFs, if the interest rate is around 2% or 4% most that I've seen, then that's the expected total return on the long-term trend. So at one point last October, I would have a lot of shares of HISU.U and PSU.U. So while the market was up that time. And then slowly, as the market was going down, as I was getting margin called, or if I saw opportunities, I actually was selling shares slowly to buy HHIS.U and a bit of WPay. I don't know if the NASDAQ 100 is going to go down even further. I don't know if HHIS.U or HHIS or WPay is going to go down even further. So I just thought I also use the opportunity to sell YQQQ and SH, try to reduce the shares, but I still kept some in case there's a bigger crash. And also because I tend to buy more than I should have on margin, so the cash ETFs, it actually shows me a much lower buying power. And I know I could just sell the cash ETFs and just have a much bigger buying power available to withdraw out of the account, or have more buying power available to buy stuff, or just leave it as the long-term trend is to make sure I don't use a lot of margin in the long term relative to the rest of my portfolio. The main reason why I decided to make the switch from the inverse ETFs to the cash ETFs is because of the margin interest costs. So because I did hold YQQQ and SH in the Questrade margin account, so by holding them in the Questrade margin account long term and have a negative total return, I'm still getting charged interest by holding them. And I saw that with my Questrade TFSA, I had a lot of cash that was not invested because I actually sold cash ETFs over a period of time to settle margin calls, because I didn't do anything with the cash ETFs after I sold them in my Questrade TFSA. Since I saw an opportunity that I could actually sell YQQQ and SH in my margin account, and when I actually reduced them, it gave me the buying power in my Questrade TFSA in order to buy the cash ETFs that I actually plan to hold them to protect me if I get margin called again later. I hope you guys liked the video. If you liked the video, please give me a thumbs up. Otherwise, please subscribe to my channel for future videos. Thank you guys for watching.